Good afternoon, everyone. Welcome to Altcoin Mentors YouTube channel. My name is Peter, and today I'm going to be doing a special video on hodling and why, in my opinion, it is not investing wisely. So hopefully by the end of this video, you don't have to completely agree with me. I'm not here to change your mind. What I'm here to do is to just explain my opinion and my side of the story so that it might be able to possibly help you with your long-term investments. Not just for cryptos, but just with other investments as well. But for more advice on trading and investing in crypto, be sure to subscribe to our channel and hit the bell button to be notified when we post new videos. So let's talk about this again. So the truths of buying and holding. So buying and holding, or HODL, implies the risk of assets is justified by the reward. Buy and HODL is a purely offensive strategy that ignores risk management. And lastly, Warren Buffett is not a hodler. So let's talk about these things. So buy and hodl implies the risk of assets is justified by the reward. What this really means is that the price just keeps on going higher and higher and higher, right? And one of the things that people always say is that there's never been anything like BTC or cryptos in general. The parabolic nature of this instrument is tremendous. It can go to the moon, and right now Bitcoin is at $8,000, and even when Bitcoin was at like $12,000, $15,000 at the beginning of this year, I saw people calling for Bitcoin at 30,000, 50,000 by April, and it's not. They said it might be 100,000 by the summer, and why it might have the potential to go up to $300,000 to $500,000 by the end of this year. Right? So, those justifications were based on angles, percentages, and the continued nature of, the parabolic status, right? But that is not what has been happening recently. Right now, we're in a static market. So let's go over the first one about there's never been anything like BTC or cryptos. And in my opinion, there has. So let me show you a chart. This is Qualcomm. Right? So what I want to show you here is this little thing from here. So it is in the beginning of 1999, right here. This is before it split 8-1, by the way. In 1999, January 1, Qualcomm was at $3. By the end of the year, it was at $100. So talk about 30x in 1 year, right? In 1 year, right? So let me show you Bitcoin. So Bitcoin from 2017, right, to the recent high here, if it started at $1,000 and it went up to a high of 18,000, that's 18x. So even on that basis alone, Qualcomm, right, did a better job. So the reason why I show this is because you have to compare apples to apples, right? You can't compare pink sheet stocks to something like Qualcomm. Right? So, because this is when things were traded on an exchange, right? So pink sheet stocks, for those who don't know, are basically penny stocks. So back in the day, before computers and before a lot of exchanges, penny stocks that were literally 3 cents, 5 cents, 10 cents, under a buck, even like 20 cents, 30 cents, were not traded on an open exchange. They were circulated by the market dealers in a little binder, and all the pages were pink. That's why they call them pink sheets. And so no one really knew the true price until orders were made, right? And so that's why we have to always remember that no matter what we're trading, whether it's stocks, ETFs, bonds, currencies, or cryptos, it's always about supply and demand, right? And the exchange of information on that supply and demand. So charts, technical analysis gives us that picture of what supply and demand looks like. But on pink sheets, you have a harder time because no one really knows what the price is until someone sells it and buys it and then books it. And that's what happened with Bitcoin for the longest time. So before the major exchanges came up, you had to just trade, you couldn't trade cryptos. You could buy cryptos, you could sell cryptos, but you had to buy and sell them to other people, right? And you were basically your own market maker, market dealer. You could buy it for $1 and sell it for $2. No one knew what the real price was, right? So because of that unregulated nature, because there was an essential exchange for a long time that wasn't very active, right? It's very hard for you to compare what Bitcoin was like in the early stages when it was like 2 or 3 cents, right? And yes, it could have gone to $1 within a year, and now you're making 50x, right? But I could give you a lot of examples of that with penny stocks as well, stocks that people had never heard of, and then eventually crashed and burned, right? I'm not saying that that's what happened to Bitcoin, but you can't use the argument of investing 1 cent, 2 cents, and letting it go up to 50x in a year, because there's still been a lot of things to do that. That's why people do venture capital, right? But they also spread around the risk, right? And that's really the nature of investing. So when people say that they haven't seen anything like this, in my opinion, that's untrue. So even if you do have faith, right, you have to understand that buying and holding is a purely offensive strategy, and there's no risk management, right? And if you do have faith, it doesn't mean that you can't sell it and take profit, then buy it back later at a lower price and own more. So on a personal note, that's what I do with my 401k. I don't really actively trade my long-term investments, right? I am a day trader by nature. I trade index futures, currencies, and then cryptos. But for my long-term stuff, recently I have gotten out. I sold my long-term ETF positions because, in my opinion, I believe that I can buy it back later at a lower price. Right? That's why I got out. It's not because I don't believe in the buy and hold. I don't believe it because I don't believe in the buy and hold strategy. But it's not like I think the market's going to keep on going down forever, right? It's just that even if I sell it, a month ago, right, 2 months ago, and then if I can just buy it back even today, just at a small little price difference, right, I am still winning, on this trade. So I want to be able to make more money and have my money work for me and not just have things stagnant. So I'll show you what I mean by that in the next chart. So this is booking holdings. People who are more familiar with this know this as Priceline. So when Priceline first came out in '99, it went sky high and then it went way down, right? So it went from $1,000 all the way into the single digits. And for a long time, you could have bought Priceline at anywhere from $10 to $20 for years. And even in the beginning, it stayed up until like the early 100s for a very long time. And then now it's at over $2,000. So we all had opportunities to buy this at a lower price at any single time, right? And so that's why, what we don't want to do is we don't want to waste our time with things. So I'll go back a little bit and I'll show you Qualcomm again. Because Qualcomm is a great example of this as well. Because what this chart shows, if you look at it, on a post-split basis, at one time in the early 90s, Qualcomm was, you could have bought it for about 40 cents, right? Sold it for $100. And then bought it back again for $15, $20. So this huge spike happens over a couple years, but it's really big because it goes from 30, 40 cents all the way to 100, all the way down into the teens, right? And then if you just kept on buying it and you hold it because you believed in it, right? This whole period of time is lost, right? And that is not what you want to do with your investments, right? You want it to grow. Because if you had just gotten out at 2000, 2002, you would have made more, right, than just, holding it for this whole period of time. You could reinvest it in something else. Because this run from 2004 all the way up till now, right, is a 100% increase from where it was. Right? But if you just bought and held it, you couldn't take advantage of it. So at any given time here or here, you could have gotten back in, right, and made a little bit more money, right? So same thing with Bitcoin. This is the weekly chart, right? So if you had bought it earlier in 2017, 2,000, 3,000, 4,000, and let's say you were lucky to stay in, right? So maybe if you're here, you can say to yourself, oh, you know what? I made 4x. I'm pretty happy with that, right? If you can say that, that's great, and you can hold it a little bit longer. But what I'm trying to say is that you could have sold it probably around 11,000, 12,000, 13,000, and you could buy it back, even if you don't buy it back at the way bottom, at 6,000, right? Because Because you don't have to be perfect, right? You can just buy it right now. If you had sold it at 13,000, sold it at 15,000, sold it at 10,000, if you bought it back right now, wherever the price is at, which is like 8,300, you are still gaining a little bit more than you would just by buying and holding. Okay, so let's look at the other truth. People sometimes point out to Warren Buffett because he buys these large companies and he holds it seemingly forever, right? And that is just not true, right? That this is an article from Seeking Alpha, and they went over his holdings because he has all these big holdings. But people don't also understand that, you know, his fund is also like more like a fund of fund. Like there are companies that he owns, and then there are stocks that he buys, and he goes through those stocks and he has a huge turnover. Right? According to this article, it's 100% turnover. So within 3-4 years, right, his whole portfolio will have changed. Right? That's why he has a team of people working. So he has a broader spectrum of stuff that he holds, and then he just turns it over, right? So we have to understand it as well. We can't just keep on buying it and be stagnant and be passive, right? So if you really want to be like Warren Buffett, right, you have to have a little bit of turnover, right? 'Cause turnover is good. So the other problem with buying and holding is that it's purely passive, right? And it seems very easy, right? So but if you missed it, you know, at 1,000, if you missed Bitcoin at 1,000, or if you missed Ether in the 50s, or if you missed Litecoin was like at $10, if you missed Ripple when it was at like 26 cents, right? You know, and you rode and you were willing to ride the wave up and down, and then you're waiting for it to go back up to the moon, right? That is what most people are looking for, right? But nothing in life that's worth having comes easy. Right? So we have to do our own work. That's why, in conclusion, in my opinion, hodling is not the most effective way to invest. Returns can be greater by selling and buying back at a lower price. And it's up to you to become a smart investor, which means to do your own research and make your own decisions. And I recommend that you do that now, right? Because a year from now, you really wish that you had started today. Just like exercise or a diet or anything that you want to improve on life. People set goals. Oh, you know what? Next year, January 1, I'm going to start doing this. On my birthday, or when I turn 40 or 30 or whatever, I'm going to start doing this. Right? But why not start today? Because your future depends on what you do today. That's really why we're here at Altcoin Mentors, is that we want to be able to help as many people as we can reach their goals to have financial freedom. So we recommend that you start it now rather than waiting. Right, because there's no better day. So our future videos that I'm going to be making in the near term are going to be a how-to series, how to start with a certain amount of money, how to short on BitMax or on Bitfinex, how to recharge, how to do some of the basic things. I'm also going to do a nice series on risk management and also on controlling emotions. And then something very exciting, I'm going to do a challenge series where I'm going to try to turn $2,000 into $10,000. So a 2K 5X challenge. I'm going to see how long it takes me. So I hope you enjoyed this video. We hope that you follow us on YouTube and follow us on Twitter and on Telegram as well. We also have a model portfolio. And if you like our video, please subscribe and you can share it with your fellow crypto traders. Thank you, and see you in the next video.